We all know the feeling. Each year, housing prices climb higher and higher. Rent payments eat up larger chunks of paychecks. Groceries cost more. Gas prices fluctuate, but they never seem to drop below a certain point. And yet, through all of this, the stock market soars. Why? Today, we're diving into the real reason housing prices are always increasing and how it's all tied to the rise in the cost of living. If you've ever wondered why life just keeps getting more expensive, stick around. First, let's talk about housing. At its core, the price of a house should reflect supply and demand. But that's not the full story. What's really driving these endless price hikes is something bigger: the financialization of everything in our economy. You see, housing isn't just about shelter anymore. It's an investment, a commodity, something to be bought, sold and traded, not just by families, but by hedge funds, real estate investment trusts, and other corporate giants. These investors aren't buying homes to live in, they're buying them to turn a profit. When homes become financial assets, the goal shifts. It's no longer about providing affordable housing, it's about maximizing returns for shareholders. And as these institutions drive up demand, prices soar. Even if you're not directly competing with them, the ripple effects hit everyone. It doesn't stop at housing. The same principle applies across the board, from groceries to gas, from healthcare to education. As companies go public and become beholden to shareholders, their focus changes. Instead of asking, how can we help our customers? The question becomes, how can we increase profits and share prices? And those profits have to come from somewhere. Think about it. The stock market's rise isn't just some abstract number. Every dollar in corporate profit represents money that came out of someone's pocket. Your rent, your grocery bill, your medical expenses. Every time a company raises prices to hit earnings targets, the cost of living goes up. Take food prices, for example. Companies shrink package sizes while keeping prices the same, or they introduce premium product lines to justify higher costs. They call it innovation, but the truth is, it's all about boosting margins. It's a tactic called shrinkflation, and it's designed to make you pay more without realizing it. Here's the harsh reality. As long as the stock market keeps going up, the cost of living will too. Why? Because the market's growth depends on constant revenue increases. That revenue doesn't materialize out of thin air. It comes from consumers like you. And when revenue slows, companies turn to cost-cutting measures, which often means layoffs, reduced services, or outsourcing. And then there's the issue of wages. While prices for goods and services rise, wages rarely keep up. Why? Because labor is treated as a cost, to minimize. The goal isn't to pay employees more, it's to increase profits. That's why, even as the economy grows, the average worker feels like they're falling further behind. This brings us back to housing. When the cost of everything else rises, housing prices are dragged along with it. Landlords raise rents to keep up with inflation. Home builders charge more to cover higher material costs. And institutional investors keep driving demand. It's a vicious cycle that's nearly impossible to escape. So, what's the solution? Many people think technology or innovation will lower costs. And while that's true in some cases, the larger issue remains. As long as the stock market's growth is prioritized, the cost of living will rise. The money has to flow from somewhere. To break this cycle, we need to rethink our economic priorities. Instead of focusing solely on shareholder value, we need policies that prioritize affordability, fairness, and long-term sustainability. It's a tough conversation, but it's one we need to have. The truth is, there's no quick fix. But understanding the forces at play is the first step. By recognizing how financial systems impact our daily lives, we can start advocating for a better, fairer future. Because everyone deserves a chance to thrive, not just shareholders.